Yo, hello. A few of you already in the chat. Nice to see you, even during these market conditions. Appreciate that. Adam, Amir, WC, Bittersweet, and Mythos hanging out already. Yeah, we'll do a little bit different this time because really there's not anything to talk about, I think, regarding Bitcoin and ETH, so we can just go over those quick and then see where we go from there. But yeah, I mean, as you can see on the weekly here, 3 weeks sideways here, 3 weeks, one a little bit bigger to the downside, and then 4 weeks sideways, and before that we've had a bunch of other sideways. So there's a limited amount of content to be made about Bitcoin. Let's talk about board games. I mean, I love board games. I could actually use some recommendations. You can comment not in here because then it's just gonna go and I'm gonna lose it. But if you have any good board games, especially some that you can play as two, I would love recommendations in the comments of the video. Not in the live stream chat because that will most definitely be lost, but in the comments. Chess is cool too, actually. I love chess. Anyway, before we start, big shout out to Woo for sponsoring the show. I mean, there's not that much that we're doing right now. Like, I've just been telling people not to trade and then exchange, so that's quite funny. But it's just how it goes. Never gonna say anything that is not my opinion. And they've been very lovely and encouraged me doing so, which is very nice. So yeah, go check them out. They're really good partners. So appreciate their support and appreciate you guys coming by, because honestly, me personally, I just look at this thing 5 minutes a day and that's it. Besides like the streams, and sometimes I research something or like look into something a little bit deeper, but really there's not that much time spent by me in the markets right now. Zero time spent trading it. So appreciate you coming by nonetheless. You think we get a new bull market next year? I think it's gonna be a bunch of sideways, but I could be very wrong. I think this is gonna be worse than what we're having right now. Like, you're gonna get a move, but I think it's gonna go sideways afterwards again. So didn't think you would stream again since there's not much to say. Yeah, but I missed last week. Not like anything happened. We were literally at the same price exactly, but I was like, I'm just gonna come by, chat with you guys, hang out, and see what we can come up with. But yeah, let's run quickly through Bitcoin, quickly through maybe ETH, but ETH is even more boring than Bitcoin. Maybe through the S&P, and then we'll see. And like, maybe we'll do like a Q&A or something, whatever you guys want to chat about. And if there's nothing interesting, we just cut it short. And if there is interesting stuff to talk about, I'm willing to run it for a while. So we'll see. But yeah, high time frame, monthly, nothing. Weekly, we're still trading below this resistance here. We've retested it 3 times. I generally think when you have a breakout to the down or upside, right? Like, when you have a breakout, if you retest the level and then chill on top of the level, that's the worst type of breakout, because yes, it's on top of support in this case, and obviously the inverse is true for this one, but also, like, if there was any urgency to buy this thing because it just broke out, it really shouldn't be hanging around that support, right? Like, breakouts are interesting because there's urgency there, and so far there's not been any here to the downside, right? Obviously, same is true on this. Like, if you have like a proper breakdown, you don't necessarily want to be spending your time at resistance, because you would want to see a bunch of people trapped and yeah. So what we have right now is this is a bearish picture, right? But it's the worst kind of bearish picture to take advantage of, because the longer it sticks around, the less clear that setup becomes, and the more risky it becomes, because then it can just go either way. And I hate those, right? Like when you have a clear setup that is showing weakness, or like in general like bullish signals, but like they're kind of like wonky, then you're kind of in a shit position, right? No matter what you do, because technically it's bearish, so you want to be short, but also you're seeing like it's not doing what it's supposed to be doing, which is not necessarily bearish in this case. And then it's easy to just kind of lose sight of your original idea, or in general just flip-flop, right? And I think that's what's been happening to a lot of people that have been trading in the last few weeks. They know like, hey, we broke down, but then the moment it goes up, their picture, like it changes, right? They're like, oh, we should have broken down harder, and then they start being bullish and start flip-flopping, basically going from position to position. And then it just doesn't do anything, and that's how you get wrecked, right? On both sides. So this is kind of the worst environment to trade. And not only is there zero volatility, but also you're kind of in resistance, but resistance isn't, like it's doing something, but it's not really leading to an explosive move, which is just tough. Like this is tough to trade. And squiggles unclear, 100x long. Yeah, send it, brother. I think in general, there's like two ways this is gonna resolve. I mean, there's technically three, but I think only two are relevant. The first one is the S&P continues to go up or down. Like if the S&P goes down, I don't think this is gonna play out bullishly. The market itself is just too uninteresting to be able to withstand like a big S&P nuke. The same, like if the S&P goes up, I could see this, given it's such an old resistance, to go out, and then you're going to get more interest. So that's number one, right? How this is going to play out. So that means the S&P is of interest. And then number two is the ETF decision, right? If the ETF gets approved, the BlackRock ETF, the other ones, like, I mean, any ETF really, but it's very unlikely that any of the other ones get approved before the BlackRock case. The BlackRock ETF gets approved, and then also in that same category, the whole Grayscale situation, right? If that is resolved bullishly, I think then we're gonna go up. Like, so that's like one where if you get any positive news in that area, everywhere else, like whatever, like a bunch of people have been talking about other ETFs being delayed and price not moving down, and that's being bullish. Not the case. No one gives a fuck about those. It's the only one that people are really interested in is the BlackRock one. Any of the other ones doesn't really matter, unless they are approved, which is very, very unlikely, right? So Grayscale decision, ETF decision, those are like number two. Number three is obviously just this like crypto showing strength itself, and I think that's just not happening. So you either, like in this case, I think, and this is completely my opinion, you're either going to be watching the S&P or you're going to be watching the news. Price itself and Bitcoin and the altcoins and whatever, I don't think they're going to give you any signal, which just basically means this chart is a little bit useless, right? The market is so boring that we need something else to kickstart it, really, in my opinion. Could be wrong, usually not. Like this is kind of like, this is shit trading circumstances, and it's also in an area where the S&P is struggling, right? So that's why we've been struggling a little bit, and I don't think that changes unless the S&P goes up or down, or unless we get the ETF approval / delay, or flat out rejection. If we get a ETF rejection, right, like we can talk about what happens if we get the rejection, I think we're going to make new lows below 24K, not new lows below here. So that's, for me, still bottom, right? I don't think we're going to go below 16K. I've seen a bunch of people be like, oh, Capo is going to be right in the end. I don't think you can be right if price doubles from where you've been bearish, right? I think that's just not how markets work. If you took any kind of bet on this, and he's claimed he has, you're fucked, right? If a market doubles, especially in crypto, and you have bets going on, that like short bets going on, you can try to tell me, hey, this is non-leveraged or like 1x leverage or whatever, but that's just bullshit, right? Anyone that's shorting this thing from 16K to 30K, just if those trades are actually real, you're fucked. But also, I just don't think we're going to go necessarily below 16K unless the S&P completely craters, right? Like if you think the S&P is going to make new lows, as in the S&P goes back below 3.5K, and that's a massive drop at this point, right? That would be a 20% drop, which is beyond significant for traditional markets. I don't think that's going to happen, right? So that's the support that I don't think we're going to undercut. But if the ETF gets denied, and I don't necessarily think that's more likely than it getting approved. I think it's like a 50-50 in my head. But if it gets denied, I think you want to be buying at 20K because I think we would go below 25 and I could see it wick towards 20, and that would be a great buy. If the ETF gets approved, if you see it early enough, right, that's a buy. You just straight up want to buy into that up candle. You're going to see price go up 5% and you're going to be like, oh, fuck, I'm late. And then it's going to go up another 10, 15, right? So I think at that point, you just need to be quick. Problem is the market is so boring that people are not on the desks. There's a good chance that I'm going to miss it just because I'm going to be doing something else. But if you're by chance at the table when it gets approved, that's going to be a spike to the upside. And that's one that you don't necessarily want to be fading early on, right? If anything, you want to see this go and start going parabolic. And then at some point, you can be like, okay, I take some off and I re-add that support. But that's kind of how I look at it. There's two extremes on the ETF side. Denial would take it very low. Approval would take it quite high, as in like 40K. So if you get denied down here, if you get approved, 40K up here. And then everything beyond those is just going to be reliant on the S&P. And if the S&P is weak, there's a good chance that it's just going to start walking down. And if the S&P is strong enough to push this back above 30K, there's a good chance that it's just going to meander upwards. Either way, when you have outside kind of sources dictating where this is going to go, that's not trading conditions you want to have, right? Like outside sources couldn't impact price at 16K. We had bad news over bad news, and nothing drove price lower. That's what you want to see, and that's what you want to trade. You don't want to be trading the markets where you're completely reliant on something that you have no edge in, which for most people is news, right? If you see it early enough, there is money to be made on news trades. But speculating on the news, especially on these ones, where it's like 50-50, it's tough. It's really, really tough. It's scary to see no reaction with so much positive news going on. Yes, it's a little bit of an anomaly, right? But then again, Bitcoin did double from the bottom, but also it's down a shitload from the top. So like I've seen a bunch of people be like, oh, Bitcoin doubled from the bottom, the S&P didn't double from the bottom. So therefore, Bitcoin is stronger than the S&P, and I think that's the most ridiculous argument I've ever heard. Like the S&P is almost back at all-time high, or was. So yeah, the S&P in general is really interesting right now. Even if you just completely ignore all the levels, because you have a high here and you have a lower high here right now, right? And the month is still going, and it's going to be 2 more weeks until it closes. If it closes below 4.3K, I think we're in trouble on the S&P. If it doesn't, if it closes anywhere above like this green box or in this green box, I think that just looks quite nice. Gut feeling from me is still that this is gonna range, but I don't have strong opinions, and it's not necessarily the market that I'm trading. So using technicals, there will be no way to play the ETF, right? It's basically a bet on whether or not it's rejected and attempt to time it for the moment before the news comes out. Yeah, basically, like if you wanna take a bet whether it's approved, delayed, because I think delayed is the more likely of all of the options, or denied, right? So if it's denied, any short will make money. If it's delayed, early shorts will make money. I think that's the delayed is pretty much what everyone assumes. So that's gonna have a downside effect, I think, but not the biggest one. If it's delayed, maybe we go to 27K, and then we go kind of from there. So you can make bets on that. If you feel like you have more of a clue than the market does. For me, that's not the case, right? I think it's pretty even on all sides, right? Skewed towards it being delayed. So I think that could be a bet. Like you bet on it being delayed, and then you buy like a nuke, like a short-term nuke into a bounce, and then you get out again, because if it gets delayed, people will sell the bounce probably, and then you can go from there. But that's basically the play that you can make. The TA play would be a close above 30K. But right now it looks like the market really doesn't want to move out of this range unless it gets a signal from the news side, right? So there's a good chance that we're just going to be stuck in between like 28 and 30K until we actually get something on the news front. So that's the way like you could play the news side. The S&P side of things, like I said, that's going to be an interesting monthly close. But it has been nuking, and the dollar has been getting a little bit stronger again. Unsurprisingly, this is something that we've been watching for a while. Dollar index oscillating in this area here is what I expect for quite some time, right? So I saw a bunch of people be super bullish. Like people were like, the euro is going to zero up here, and then the dollar is going to zero down here. No, like this is just gonna range more likely than not. And so there's not that much there. But obviously from support to resistance, here these like 4 or 5% on the dollar index have a significant market impact, especially right now where no one has a clue what's going on, right? People are confused. People are afraid, and no one really understands markets right now, which is usually, in my opinion anyway, good for traders. Like when everyone knows what the fuck is going on in the market, you can invest, but trading is hard because people are not panicking necessarily, and that's what you can make money off of. Like when people panic or FOMO, both of those nice ways to take advantage of kind of like inexperienced market participants. Right now you have people panicking and FOMOing left, right, and center. But yeah, it's also hard. Like trading's just hard sometimes. And then in my opinion, you should just chill. Greg says, I'm also leaning towards ETF delay. I see Twitter posts predicting when it will be announced. Is there any way to really know when the Bitcoin ETF will be announced, or is it everyone's just guessing? I mean, there's a few ways to have better guesses, but it's guesses nonetheless. And there's a few accounts on Twitter that are pretty good with this kind of stuff. But it's all like it's gonna be all over your timeline the moment it comes out. So it doesn't really matter who you follow, as long as you follow like 100 people in crypto, like 20 of those will retweet / tweet it the moment it comes out. So yeah. Anyway, that's crypto, right? Pretty damn boring. I didn't even talk about the daily time frame, but I mean I did kind of like a range here. The lower time frames are even worse. Something that I have commented on a lot in in the recent past, and this is something that people keep doing, is these like SFPs that people like to call these, even though they're not really like significant. But this is something that people have been watching and have been getting wrecked by, right? So every time a low gets taken out, and this is like 2018 to 2023 kind of trading handbook, so to say. Like a lot of people watch this, they're like, oh, the moment the stops get taken out, then we go up, right? And as you can see, and this is something that I watch not for the long signal, but for, is the market weak or strong, right? When you get SFPs or whatever you want to call these spikes continuously, and they don't lead to anything, that's generally a bad sign, right? So the low gets taken out here, the first low gets taken out here, and then a bunch of people, and you can see this every time, a bunch of people hop on, and then it gets taken out again, a bunch of people hop on again, like you had another squeeze here. People are like, oh, finally it's breaking down, it comes back up, and then you have the bulls be like, oh shit, this is the one. It goes up, immediately full retraces. That's the same here again. You get like a couple hours of green, and this keeps happening over and over and over again. It's a bad sign, right? That's what you don't want to see, because basically what this does is it gets bulls to long, and then they put their stop loss at the lows every time, and they just kind of bleed out. And this is what a weak market usually does, especially in low volatility kind of environments. So like if you're trading like that, you shouldn't be. If anything, zoom out and look at the more significant lows. These 4-hour lows don't really make a difference. One thing that I will say on the low time frames is that we had this setup here, right? And I didn't tweet about it because I was like, this is probably not going to play out, and this entire market is just like too boring. But we had this setup here that I like to play when I think the market is bullish. And that's when you set a low after a dump, you kind of take it out, you trade at the lows, and this is where people get very, very bearish. And then you get an impulse to the upside and a little bit of a consolidation afterwards into like a little bit of dump, right? That's usually, people call it inverse head and shoulders, whatever. For me, that's not it. It's just basically you have a liquidation event, you retest those lows, you find willing buyers, you show that there's strength, and then you come back down again to freak the last few people out. Like people that bought in here get freaked out that they lost all of their P&L, they jump out, and then you go up, right? So that was a pretty neat little setup if the market was bullish and you had a little bit of a spike up, but it didn't lead to anything, right? And then we're coming back to this low right now, and there's really no reason, in my opinion, to come back here unless it's actually just bearish, right? So low time frame, I don't even like this too much. I'm leaning more bearish than bullish on all of these, but yeah, this is just a low time frame thing that I like to watch when I'm actually bullish. Right now I'm not. And this is kind of like, this is also something that people don't really realize. They look at for these patterns and whatever, and then they wonder why it works like sometimes and sometimes doesn't. And it's basically because you have to identify what kind of market we're in and what the high time frame structure looks like, right? And this was not set up to be a bullish reversal. It was more kind of set up to range, and it depends on kind of like the whole structure of everything, rather than just, oh, there's like 3 spikes and it's gonna go up, right? If you get something like this after a huge nuke, it's much more interesting. Like you have a huge nuke, you get this, and sentiment is very bearish, and you can squeeze quite a bit off of something like this. When you have this at the highs, while the traditional markets start hitting resistances, whatever, it's a bit of a different story. How much Doge you buying before the next bull run, bro? 0. Doge is boomer as fuck. Like if I wanted to buy a meme coin and I mean, there might be a time where I want to buy a meme coin. Unlikely, but there might be. The last one that I would want to be buying is Doge. I think even the whole Harry Potter, Obama, Sonic, Inu, whatever the fuck, the one that everyone keeps talking about right now, is more interesting than Dogecoin, right? Like, that's the kind of community that I'd 100 times rather have than the Dogecoin community. The Dogecoin community are just people that are jumping on the bandwagon late, like Elon Musk, right? Like, Elon got early on into Doge, but the only people really left there are bag holders. Dogecoin not gonna be one of the ones that I find interesting at any point. I think the only reason to buy Dogecoin is because you think Elon can pump it. When do you think new capital will come in? I'm not so sure. I don't know. Like, could be quite a while. It doesn't, like, a bunch of people, and I agree with a lot of people. Like, I talked with CL, an excellent trader, and he kind of made the point that people are getting more and more like stupid, and the markets are getting more and more online, everything. And people are basically doing dumb shit, and that's not going to stop. That's going to continue, right? And I agree with that. And he made it as like a bullish crypto kind of argument. I think that that's true, but also it doesn't have to be crypto that gets the influx of idiots, right? Like, you can, as you saw last cycle, GME, for example, had much bigger inflows than crypto had. And I think it doesn't have to be crypto that kind of wins on that front. It can be anything else, even though, like, the stuff in crypto, like we just talked about, Harry Potter, Obama, 10 Inu, whatever, that's the most retarded stuff you can find, right? But it doesn't have to mean that that's where people are gonna go. They're gonna find something. It doesn't have to be crypto. It's not as easy as that. But yeah, I don't know is the answer to that. Like, when is money gonna come back? I don't know. Just watch the stablecoin flows. Watch if stablecoins kind of start gaining traction again. And then see Bitcoin at all-time high. Like, if you really want to see money inflow in crypto, wait for Bitcoin to be at all-time high. And then you're going to get altcoins going crazy. Before then, I don't think there's going to be like massive retail inflow, and your old season is also not necessarily going to be something that's going to come around before we have a Bitcoin all-time high, or at least close to it. Are you or will you be interested in shitcoins on Base? No, I'm too lazy to bridge. So the answer is no. I'm generally not interested in shitcoining too much. All power to the people that want to. I don't have the motivation to do so. Why do you choose to look at BitMEX perp charts instead of Binance Spot? Because all my drawings from back in the day were still on there. It doesn't make a difference. Like, this is a BitMEX chart. This is Binance. BitMEX has more history. It's one of the reasons why I like it better. But also, like, at the end of the day, this is exactly the same chart. It obviously doesn't really deviate too much. So it's just, I had it in my watch list already. I had my lines because this used to be the most important chart. But nowadays, I don't trade on the 5 minute or like on the hourly, on the 4 hour. So it doesn't make a difference. Like, the daily time frame looks the same, and the 4 hour looks the same still. Even down to the hourly, they look the same. There's really not that much difference. So if you don't care about the history, use Binance. If you care about the history, you can also use something that has even more history, like Bitstamp, for example. This is enough for me, right? I don't need to go further back than $200 Bitcoin. I think that's only, like, if you want to look further, it's only to kind of find fractals and look how old bear markets kind of played out. If, like, the only really interesting part is 2017 onwards, in my opinion. And yeah, on Binance here you have, I don't even know why this is the case. There's probably other Binance charts that have a little bit more history, but it doesn't really matter, like I said. Geez, these people asking questions must be 3 years old. I haven't seen too much bad stuff, but yeah. Do you think Grayscale's ETF is getting approved this week? I mean, if it does get approved, that's gonna be having a big impact. So just want to watch. That's why I said Grayscale and in general, like the ETF decisions are the ones to watch. Like if anything gets approved, you're gonna see a positive impact on price. Whether I think it's a 50-50. So. Why do you use bodies for the order blocks? I don't use order blocks. I just look at areas of consolidation and I find those interesting. So it's my own made up rule set. So all of these lines you take with a grain of salt. It's just how I like to draw them. It's basically like whenever I see areas that I find interesting that I think will have an impact, and there's not really a specific rule set, it just must make sense to me, right? Like if there's an area that I'm willing to take a trade on that I think is important enough, I will mark it. And if there's an area that I don't think is too interesting, I just don't mark it. That's how the lines work. They're more of like a guiding light for me in a way, right? Like yes, here and there I would want to do business, and everything in between. Like you could draw a line here, and I like 24.3k for example, like a resistance here / resistance turn support. But would I take a trade at 24k? No, because contextually we would have taken out the lows where the ETF news came in, and that is just contextually really bad. So yes, this is a good support resistance level, but just looking at the context, I don't like it, so I don't have it. And you can have this, like this is how I go through the charts, right? Like I look at it, like what would this actually mean? Like I might draw some levels and then think about, okay, what would this actually mean if price went there or not? And then I remove or add accordingly. So if you were trading, how would you have positioned or wanting to be positioned? I mean, I'm a trader, and if you ask me how would I be positioned if I was trading, I mean the position that I would have right now is flat because the position that I have right now is none. So I don't quite know how. Like if you're like asking if you had a gun to your head, where like how would you be positioned if you were forced to be? I'd be short, but I would fucking hate it. There's a reason why I'm not short. There's a reason why I'm not long. There's a reason why I'm just sitting out, right? So it's pretty straightforward, really. If you think, I mean, this is just how it works, right? If you think you have an edge, I mean, take a position, right? But if you don't have an edge, why have a position? And right now, I don't feel like I have an edge. I might have a short-term edge if I see the ETF news early enough, and I'm more than willing to take a position at that point. But unless that happens, like I just don't see a good reason to be in the market right now, because I don't have any better idea where this is gonna go over anyone else. And when that's the case, I don't want to be trading. So. Do you think we're setting up for short squeeze up to 30.4k? If anything, it looks like we're setting up for long squeeze to me. But I think volumes are so low, and I mean open interest is behaving a little bit odd right now, but nothing like too crazy. So I don't think there's gonna be any squeezes. You're just gonna get news impact. I don't think there's this. Like people are gonna be like, if the ETF is approved, people are gonna be like, hey, there's a short squeeze here. But is it really gonna be a short squeeze, or is it just a bunch of people market buying because the ETF is perceived as big news? It's not a short squeeze. It's just a bunch of people buying again. Or if the ETF is denied, a bunch of people will just sell. It's not a long squeeze. And I don't think there's a short or long squeeze that is waiting to happen here. If anything, this is waiting like a bunch of people. Like if you look at this, there's a bunch of people sitting on the sidelines waiting for this to pick a direction, including me, right? A bunch of people in the same boat that have no idea where this is going to go, just sitting here waiting. And if it moves, they're going to jump back on or short. Last stream, you said if XRP would go below 0.6, it was cooked. Now it's at 0.6. Do you still think it's the same? Let's look at it. I don't even remember saying that. Yeah, but this is, again, you're kind of misunderstanding what I'm saying, right? So you look at this XRP, and we had the whole breakout because of the XRP case. And what I said is if we lose this, right, if we lose 0.6 support, then it's kind of fucked. And I still stand by that, and I still think that's the case. I generally wouldn't want to be buying XRP because I feel like the case is probably just going to be challenged. The XRP trade for me was the 2x off of the news, right? I talked about this for months and months, and then it played out. And funnily enough, I didn't have a position, is what it is. We made a bunch of money on the previous pumps. Don't really care too much. But if we close the weekly below this, then market structure-wise, it looks just horrendous, right? You basically had a breakout that full retraced. So yes, but also there's still 4 days in the week. And this is still, like, this is a support test. So right now, if anything, and I mean, I most definitely don't want to buy anything right now. But if I had a gun to my head on XRP, I would actually be looking for buys because there's an easier setup here for XRP longs rather than shorts, right? And that is, like, if you really wanted to, it would be this setup. Basically, you're like, okay, they're not gonna lose the next court case. Support's gonna hold. This is the first test of support, so I can buy it. But if they do lose all of the candle that they had, then it's cooked, right? And then you can take this trade if you want to. For me, not really interesting. The trade played out after it 2x'd here already. I don't need to kind of take that trade again. Especially with the whole ETF narrative gone now and retail dead. It's not the way I would want to be trading altcoins, right? But chart-wise, it's a better long than short. I just don't like it, so I'm not going to take it. But yeah, if you start losing 0.6 on a weekly closing basis, it'd be basically that setup, right? And this is the cool thing about why I like these kind of setups, even though I don't necessarily think this is going to play out, right? So it's not something that I would necessarily agree to. But the reason why I like this setup is because you have a clear invalidation. Like if this entire impulse goes, it's just horrendously bearish. But also if you start losing the support, right, and it's been historically significant, you can see how often that's kind of like been support resistance. If you lose that, you can just close out the trade for like a scratch, right? Let's say this closes down here. You're like, fuck it. I've had enough. I'm getting out. I want to see this start coming back up above 0.6 for me to take the trade again. And then you lose, instead of this 20% loss, which is quite significant. But then again, if you size accordingly, it's not that bad. This is just how high time frame trading goes, basically. But then instead of like having that kind of wide stop loss, you just lose like 6-7%, and that's much easier to bear over the 20%, obviously. So that's like these kind of setups I love taking. It's just right now I don't like it. I don't think there's enough interest in crypto to make XRP float against the market. So if I was bullish Bitcoin, maybe I would take the XRP trade. If I had any info on the XRP situation in front of the courts, maybe I would take it. But yeah. Puggle Power says, what does open interest mean? And Jamo says it means how many people are openly interested in crypto. I don't know if you're trolling, Jamo, but that is not what it is. Just Google open interest. OI is open interest. Jamo is right on that one, but it's not that. Just Google open interest, add like your favorite exchange, and then you'll find it out. But it's basically how much positions, like how many positions are open. Not how many, but how much in terms of Bitcoin or USD or whatever. But yeah, Jamo's trolling. Oh man. But yeah, that's kind of how I look at it. In terms of trading, right? So if you want to take trades, there you go. There's one, but like I said, I'm not too interested. Hey Don, any ideas to why Bitcoin seems to be taking less losses than the S&P? Yeah, that's actually one of the only bullish things that we've been seeing lately. So because we've talked about the bear case and we talked about like all things that are going poorly, right? Let's look at this real quick. So this is the Bitcoin versus S&P chart, as in like just relative strength in comparison to the S&P. And it's actually not been too bad, right? Like ever since the bottom, Bitcoin's up like 60% against the S&P. Then again, ever since the top, we're down 60%. So, and obviously down 60% is much worse than being up 60%, right? As like just given how percentages work. And if you don't know why that is, you should definitely look into how percentages work before you trade. But yeah, the last three weeks have been green so far. It's only kind of like negated. Oh, Jesus, my pronunciation goes out the window. That 1 week of downside, but we've had a little bit of an upswing here, which is nice to see. The reason for that is basically because we have had a bunch of ETF speculation. I think there's a lot of grayscale rumors floating around. I've seen a bunch of them on Telegram. I've seen a bunch of them in Discords. People are openly speculating on the grayscale ETF basically being approved, and also just in general the ETF going well. And I think that's kind of like been in the last 3 weeks a little bit of an uplift in comparison to the S&P, but it's not been leading to USD gains because and we're still trading quite like we didn't even in comparison to the S&P we didn't even make a new high on the ETF news, which is obviously not a good sign. Doesn't the grayscale ETF decision come out this Friday? It's supposed to, yes. So that's going to be an interesting one. That's, I think, the earliest where I expect volatility, unless someone is leaking the decision early, and then you might get some front running like a day before, but not really expecting that too much. So that's the volatility injection that we're going to get. More likely than not, even if we don't get any news on Friday, given a lot of people are expecting news on Friday, they're gonna sell off, right? So watch out for Friday. Until then, not expecting too much. How do you size your trades? I always just all in my trades. I mean, that's very much depends, right? You have a really good setup. Like, for example, Bitcoin, right? I have a certain amount of money that I'm willing to put into crypto. And Bitcoin at 16K, I was just like, I'm going to put as much in as I allow myself to. So that was basically like, I wasn't leveraged at all. I don't really leverage trade. But I just bought as much Bitcoin on that one as I could. And as I allowed myself. And then on this leg here, I did less, right? So I bought a bunch here. It went up. I sold into 30K. And then we dumped back down here. I saw the ETF news and I bought back in. but with less because the setup was less clear, right? It was pretty obvious to me that we would go up. This one was not as clear, so I bought less. So it depends on the strength of the signal, basically, how high my conviction is, all that kind of stuff, and that's very individualistic, right? But if you take the same size every time, no matter how strong your signal is, that's just bad trading, right? If you have a weak signal, you should be like sizing appropriately. Like if you're all in every trade, you're gonna get wiped out eventually, especially if you trade with leverage, right? Because this is sizing is much easier without leverage. If you trade with leverage and you just 10x your entire balance, it's even less scientific than than what you could otherwise do. Any thoughts about the Dutch spot Bitcoin ETF? Saw someone commenting about it, that it would be a real spot ETF, that it wouldn't be a real spot ETF. There's a bunch of ETFs already. It's just everyone's waiting for the American one. I think that's one of the reasons why it's actually going to be, I think it's going to be a catalyst and it's going to drive prices up. But afterwards, people are going to be surprised why prices aren't going higher. Right, so if you got an ETF approval, I think we'd go to 40K, and then I could see it bleed out back towards 32, 33, 35 maybe, because people are like, what the fuck, where's the buying? Because we do have ETFs already. It's just the American ones are the ones that anyone cares about. Hey Dawn, as you trade on high time frame, how do you manage your emotions and trade on such a long time frame? I mean, I just don't look as much. It's easier when you zoom out. Like if you size, so you want to take advantage of a 16K to 30K move, 16 to 15K is not going to be that bad. So it all depends on sizing. It all depends on how much you look. It all depends on how far you zoom in, right? So for example, like a bunch of people have been panicking over these moves in the last few days. If you go to the weekly time frame, there's literally nothing happening, right? So you wouldn't be panicking. But yeah. So that's that. We can talk about ETH real quick, but honestly, I'd rather not. It's just nothing's changed. Resistance is resisting here. And until that changes, it's bearish. And a false breakout, bearish. ETH BTC, same story here, keeps downtrending, right? That's a clear downtrend. I've seen a bunch of ETHs try to convince everyone that this is bullish. I don't see it until the downtrend stops. This is not bullish, it's bearish. And the downtrend would stop above 0.07, right? That's the area to watch. And yeah, that's basically it. Bunch of people are like interested in Sol, but that's also at Bitcoin and USD resistance. So I don't really see what I would be doing here. If you look, this has been ironclad support before the FTX nuke, and now it's ironclad resistance. And then you look at Sol BTC, also stuck at resistance, right? So, and also in a downtrend, obviously, for now. So the Sol trade, there might be something low time frame, high time frame, there's nothing. The only argument that you can make is on Sol USD, that you made a low here, a high here, a higher low here, and a higher high here. So you could argue that this is early trend change, but I would like it to trade above 28, 29, maybe 30 before I would be like, oh yeah, this is an uptrend now. Because otherwise you're just buying into resistance, and I don't want to buy into resistance. Not like this is a chart that I would buy if there was more interest in crypto right now, but there just isn't, right? Nothing that I can see anyway from the retail crowd. If the retail crowd was still around, you would see me buy Sol into this resistance, and I wouldn't think twice about it. But right now, that's not the case, at least from my perspective, and then I'm just not interested. So, yeah. And then Doge got rejected by resistance. I don't know if you saw the Doge dancing around. It's a new trading view thing. It's quite funny. Very boomified meme. Anyway, got rejected by resistance. Actually was quite a nice kind of double confluence thing. Rallied into resistance, didn't manage to break out. On BTC pair, it rallied also into resistance, didn't manage to break that. It's now back at support, but not the biggest fan. Like I said, Dogecoin you will not see me buy. What the fuck was that? Yeah, it's very odd. If you go, the first time you open Doge USD, when you open a new tab or whatever, you'll get the Doge dancing. How do you draw your boxes? I just go here and then rectangle. And you can star the ones that you like. I have done that and I never click on this. I always go down here anyway, which is a little bit stupid, but that's how I usually operate. But yeah, you can do it this way. Just press on the star button and then you can have your favorites here. I never use them. I always go here, even though that is a little bit more annoying. Don't ask me why. It's just being dumb. Oh. The question wasn't how to draw a box on TradingView. It was just the rules for it. Like I said earlier, there's no real rules to it, but I like to look at candle bodies mainly, as you can see. Basically, when you have a downtrend, and this is just the very much TLDR version, when you have a downtrend, I'm interested in the green candles in the middle, right? Like if this is a continued downtrend, there's going to be a green candle somewhere there. That's going to be an interesting point. Basically just marks out consolidation. I box that out, and that's usually how it goes, right? So for example, downtrend, you had a little bit of a consolidation before a further nuke, and that's what I boxed out, and that's how we've been trading. The same obviously in uptrends, right? You have an uptrend. There was really nothing of red candles in here, and those are my favorites. I'll just listen to myself and actually do this. And then you had support down here, and that actually worked out quite well. I actually took a bunch of trades in there, and then the only reason why it nuked this support is because of the FTX news, right? So would have been excellent otherwise. Was still excellent. So yeah, and then consolidation at the bottom. Like I generally look at consolidation areas. Like this is consolidation 2, and then I was like, okay, if we can make it above here again, it starts looking good. Above after the COVID crash, for example, and we rallied into it, had resistance, but the moment we broke through it, never looked back, and that's generally how it works. Same thing here. You had consolidation here. You could argue like same here, but you basically had consolidation here. The moment you broke through it, you never look back, and those are the ones that I like. Reason why I moved this box higher is basically because now that that's already played out, I'm looking for the more bullish pullback rather than the bearish one. But it all depends on context, and there's no clear rules to it. So you shouldn't necessarily copy pasta my boxes. You should just be thinking like, what would make me want to take a trade? What do I think is an important area? All that kind of stuff. It's not about the TA. It's about how you use it. And if you just draw boxes and then never use them, they're useless. Where do you think we would trade around halving? Now it depends on the ETF decision. If the ETF doesn't get approved, I think around 20 to 25K. And if the ETF gets approved, around 40. That's my guess. I think after the halving, we're going to get it dumped though. Unless the S&P just does something miraculously, like just go up 20% above all-time high or something, then that would change. But yeah, that's it. I think we've covered enough. Actually worked out quite well. Thanks for helping out by asking smart questions and giving smart answers. the open interest answer. I love. That was good. And yeah, appreciate you guys coming by. Big shout out to Woo for sponsoring the show. Really appreciate their support. The links are in the description. You should go check them out. I quite like them. And yeah, hope you will have a nice rest of the week, and we'll see each other on Friday. Or at least Cred and I will be hosting the usual podcast that you can listen to on Friday if nothing goes wrong. So yeah, till then, love you guys. Bye bye.